Today I want to talk about IPO market. By the way, congratulations for those who got 快手. Anyone of you apply for 快手? Anyone of you apply for this IPO? Okay, yes, my mom, yes. Okay, great. So how many of you got shares? How many of you got shares? No. Okay. Then can you tell me how many shares you apply? Can you tell me how many shares you apply? Okay, how many lots? How many lot you apply? So 2 lots. Okay, 1 lot. Okay, 2 lots, 1 lot. How about others? 2 lots, 1 lot, 20 lots. Okay, 20 lots, 15 lots. I remember when I was young, usually I think that I'm so unlucky. How come I applied for it but I didn't get any shares? Then I want to show you. Are you really unlucky? So here, there's one website that I highly suggest you to check for. So usually in Google, you can type HKEX news. Then you can go to HKEX news, and here we type is it 1024, and you can search. And here you can see that announcement offer price and allotment result. And let me make it bigger. So you type 1024, and then you go down here, announcement of offer price and allotment result. Click it. You find summary. And the interesting page is, let me make bigger again. Okay, so what's the probability that you can get a shares if you apply for only 1 lot? Do you know what's the probability that if you can get shares if you only apply for 1 lot? It says that 27.8 thousand out of 696,000. So what is the probability that you can get shares if you only apply for 1 lot? Yeah, 4% said, right? Then how about, I remember a student said that, so it means if you don't get shares, don't feel unhappy. You are just a majority, 96%. You are not that unlucky. So how about another student apply for 20 lots? So how about 20 lots? If you have about 20 lots, 4.5 thousand can get shares out of 41,000. So it means even you apply for 20 lots, the probability that you can get a shares is only 10%. So it means that if you can't get shares in this range, don't feel sad. You are just the majority, 90%. I have a friend applied for 30K and didn't get a shares. 30K is already a large amount of money because 30K is already 3 million, right? But even you used to spend 3 million to apply for it, but the chance is only about 50. So it means if you want to guarantee a shares, you need to go to this range. You need to apply for 50K, then you can get 100 shares. And all the way down, if you apply for 4.5 million shares, you get 1,400 shares. What? You apply for 4.5 million, you only get 1,400 shares? Do you know how much you need to pay if you apply for 4.5 million shares? How much you need to pay if you want to apply for 4.5 million shares? Let's say you don't do margin. How much you need to deposit to your account if you want to apply for 4.5 million shares? Very good. Approximately around 5 million, I guess. Also 500 millions. 5億 okay, 5億. You spend 5億 500 millions to get 104,000 shares, 1,400 shares. So is it good? I mean, usually when we deal with IPO, I would say that IPO is good, but many times I want to ask myself a question: how much should I apply? And definitely I don't have 500 millions to apply for it. But even within this range, for example, whether it's better for 100,000 or 10,000 or 10,000 is still a question, right? And here I want to show you how can we answer this type of question with a simple financial model. Okay, right. So here, usually when we set a model, we need to have some parameters. For example, here you can see that we have the interest margin, 2.8%, let's say. Application fee, $100. So it means if you apply for it, no matter you get shares or not, you still need to pay 100. And loan period, 6 days. And transaction cost 0. Offering price, 115. And selling price, 300. And margin, 90%. It means you decide to borrow 90% from your brokerage firm. And you also got 10 shares, 100 shares, 1,000 shares, 10,000 shares, 100,000 shares, 1 million, and 4.5 million shares. And here is the allotment result. This is the total applicants in each price in each lot, and then is the allotment. So it means 696K applicants out of, and then they all get 0 except this 27.8K can get 100 addition. And the same, and then the same. And for this one, let's say there are 444 applicants. Their base shares are 700, but out of this 444 investor, 226 investor can get 100 additional shares. Now we get all the parameters. Before I do all calculation, let me guess, which one provide the highest return, highest expected return? Let me guess. Before doing any calculation, let me guess, which level provide highest expected return? So 100 shares. How about others? Just pure guess, no worries. 100 shares, okay, and maximum 100 shares. So it means either the smallest or the largest. Then let's check. So first, thank you. So let's check. First, we want to get the total investment. Total investment equal to what? Equal to the shares you apply times the offering price. Wow, so you can see that if you apply for the maximum amount of shares, you need to pay 524 million. How about deposit? You decide to borrow 90% from your brokerage firm, so that's why you only need to pay 10% in each case. Then have a loan amount. Definitely the remaining will be borrowed from your brokerage firm. How about margin interest? So margin interest should be on the amount you borrow times the margin interest rate and times the loan period, usually 6 days, and then divided by 365. Okay, so it means if you apply for a maximum amount, you need to pay, just for interest, you need to pay $223,000. So what's the worst case scenario? The worst case scenario is that you only get the base shares. So here is the selling price minus the offering price times the number of shares you can get in the base case, and then minus the application fees, and then also minus the margin cost. How about best case? So best case, almost the same. Except that now you can get additional shares. But you still need to pay the application fee and also the margin cost. Now you have the worst case returns and then best case returns. And we still need one more variables for us to calculate expected return. Do you know what that is? Let's say you do a model and you calculate the worst case scenario, best case scenario returns, and we still have one missing numbers here. Very good, probability, nice. We still need to know about the probability. And here, let me make it smaller. So probability equal to now you can calculate the expected return. Expected return equal to the best case scenarios times probability plus the worst case scenario times 1 minus the best case probability. And you all the way down. And based on the analysis here, you can see that actually many of my friends fall in this range is sad. They apply for 10K and at the end of the day, they pay a lot in margin cost and then application fee, but didn't get any shares. It is quite sad. So based on the analysis here, what would be the optimal number to apply for? Let's say you can only choose among these 6 options. What would be the best option for you? Okay, 1 million. So can I say that applying for 1 million is always the optimum strategy? Can I say that 1 million application is always the optimal strategy? Can I? No. Why not? See, our model always showed that 1 million is the best. How come you say that? How come you say no to this analysis? How come you say no? Okay, right. I don't have that much deposit. Yeah, let's say you have this such amount of deposit. Is it always the best to apply for 1 million? Right. So actually there are several factors. First, it depends on the selling price. Second, it depends on the distribution strategies. I would say that even for the same underwriters, the distribution strategies is not the same. And very good. One more thing is that we don't know, right? We don't know the application numbers. Even though you can read the news and you can estimate the numbers, but it may not be the realized one. But at least for the selling price, we find that it's only applicable in this case that the selling price is quite high, so it seems 1 million is the best. But how about in other prices? Yeah, it's not. It depends on whether the company. Yes, that's true. It depends on whether IPO is hot or not. In terms of hot, it depends on 2 things. First, how many people apply for it. Second, how far it can go on the first date. Yeah, I like you playing out this point. Why don't we compare percentage returns? I like this point. So how about we add one more column? Wow, it seems it looks much better, right? When we estimate in terms of return, it looks much better. 55, 13, 4, 2, 1, and 0%. Wow, it seems very good for you to apply for a low number of shares. But here I want to talk about the selling price. So let's say, what if the price is not 300, but it's 200? Which one is the best? Definitely you can change these numbers to 200 and check everything again. But it's quite time consuming. So I want to talk about this data table. So in this data table, I always list out 100 shares, 1,000 shares, 10,000 shares, 100,000 shares, and 1 million shares. So there are all possible price here, and this is the expected return here. So now I select from B20 to H32, and then we go for data. what if analysis data table. So in the data table, I want to replace all the column input from 80 to 300 to the same price. So I want to try 80, 100, 120 and see what will happen to the expected return. And let's do the calculation. Now you can see that what is the problem for 4.5 million is that if you apply for 4.5 million, and let's say based on the current allotment result is that the break-even price is 280. So it means that if the price actually increase only 100% from 115 to 230, you will still make a loss. And if you apply for 1 million, then the break-even price is much lower to $200. And but how about in these four cases? So for the very lower ones and then the 100,000 ones, the break-even price is about 160. And then if you fall in between, it seems that the break-even price is only 140. So that's why you can see that even those IPO always. So why I want to construct this type of Excel analysis is that sometimes IPO looks so great, but I would say that it's not that good at all. Okay, I get another good question. So if investor have enough money to apply for 1 million shares, should the investor go to international offering? Nice question. We know that in US, not many people apply for IPO because they know that they can't really get a IPO shares. Why? Because they usually go for international offering or so-called placement. It means that the underwriters have the discretion to allot to share to you or not. So even though you apply for 10 million shares, doesn't mean that you can get any shares at all. But in Hong Kong, the scenario is different. That certain amount of shares from 10 to 15% have to go to the public offering. So that's why if you don't have much connection with those underwriters, even you have a lot of money, the only way for you to get shares is still through this offering. For example, when we go back to this offering page, let me see. See, the final number of offering shares under the Hong Kong public offering has been increased to 21.9 million. You may think that it's that much, but it's only 6% of total number of offered shares. So it means that actually not much go to the public sector, only 6%, and the 94% goes to placement. Then you may think that yes, it's very good for you to apply for international offering. Then I think the first thing is that you need to have an account in iBank, and second, you need to have a good relationship with the iBank so that they give you shares. Okay. Then how about the second case? Let's say we know that Faisal is performed very well, but how about another? For example, this one called 車市, 網上車市, is also very hot, and then but the price only increased by 22%. So is it still good to apply for 1,000 or 10,000 shares? Then let's do the math. Here we can do the calculation, and you can see that for 車市 cases, is increasing, but again from $3, $24, $4,500. So it means that even though you invest a lot, but then the return does not increase significantly. And but then how about when the stock price drop? Please, firstly, we just talk about the case that you apply for something and it performed very well. And this another one called 樂享互動 which actually dropped by 6%, even though it's very hot, but it dropped by 6% on the first trading day. And you can see that in this case is bad. So your loss from 119 to 37,000. So what I want to say is that if let's say if you apply for both Lok Hang, Chessy, and Faisal, in Lok Hang you lost 37K, and let's say you are very rich, and then you apply for the maximum number of shares. From Lok Hang you lost 37K. From Chessy your expected value is 4.5K, and from Faisal your expected value is 35K. So overall it's almost zero. It's almost zero. But if you apply for the middle one, maybe you can make some of the profit. So what I want to say is that IPO looks good, but sometimes it actually make you to reserve some money to invest for it, and instead of just buy and hold some good companies. So I would say that if you have some spare money, maybe you can just apply for a few. And better, if you apply for it, try to use some brokerage firm that does not charge you any application fees. If it does not charge you application fees, then you stand a good chance to make profit. For example, let's go back to Faisal cases. Faisal cases, if it does not charge you any application fees, and if you don't do any margin, wow, see, very nice. It's much better. Okay, so this is what I want to share today. I would say that even though Excel is quite straightforward and simple, you may think that do we really need Python to do calculation for our investment? No, not really. I would say that for me, actually, I have more than 10 Excel files, and in each Excel file, I have different simple model, and actually it helps you to solve a lot of questions. If I have time, I can share some of my real Excel file to you. So how many percent of application fees that Hong Kong Exchange charge? The application fees actually not go to Hong Kong Stock Exchange. The application fees go to your brokerage firm. Hong Kong Stock Exchange only charge when you get shares. So in Hong Kong, if you buy shares, they got you 0.1%. If you sell shares, they charge you 0.1%. Other than that, only the brokerage firm charge you application fees. So that's why sometimes you can find some brokerage firm doing some promotion, say that application fee is 0. Then in this case, you can apply for it because the chance that you make a loss will be much lower.